Well, hello there. Post Thanksgiving. It's funny. At the top, at the recent top of the market, um, maybe a week ago, maybe a little bit more. I forgot exactly. Um, I was getting a lot of emails from people about uh, your beloved host being denigrated elsewhere on the web, and I've never gotten so many concerned emails, some urging action, some offering aid. Um, and, haters gotta hate, it's like it says here. But in retrospect, it is kind of funny that that occurred pretty much at the very top of the market, and things just fell to pieces after that. So maybe that's another indicator for us, the hate Tim indicator, something like that. I will say, though, if you are one of those hypocrites that uh, listens to me and reads my work, even though you dislike what I have to say, there's only one of two realities. Either one, you're fading me with the notion that that's the way to profits, and if you are, keep doing that. And if you're not fading me, if you're following my trades and doing the same, then examine your own hypocrisy. That's just silly. But your profits and losses don't really matter much to me. I'm here to offer my views for whatever they're worth. I may be the greatest trader in the world or the worst. I know that I'm neither. I'm somewhere in between. But I try my best, and my heart's in the right place. And it's a good heart. We all know that. So the vast majority of you are real slopers, and I welcome you here. And I trust you've been doing pretty well. I don't have any specific agenda to go through. We're just going to thumb through some charts, and I'll share my thoughts. I'm recording this at 4:42 p.m. on Monday, November 28th. So there you go. Here's the euro. And one of the reasons that I covered on Friday was that we were getting so close to this very big supporting trend line, and we bounced hardly off that. We're actually down a bit now, about 20 pips, and clearly what I would like to see, because I'm short again, is, but not that short, I'm about 40% committed at this point, just for the record, is to break beneath this level. As far as the ES goes, the triangle pattern did a beyond smashing job of what it's supposed to do. And we're down pretty much identically, percentage-wise, on this, what we are on the euro. Again, I covered on Friday because we beautifully hit the target based upon the measured move out of this symmetric triangle. In fact, this thing is just so beautiful. I mean, just take a look at this. Just take a look at this perfect symmetric triangle and the breakdown and the retracement. I mean, it's like God himself is working his magic here. I mean, that is just, it's beautiful, it's extraordinary. And for someone who is as serious a chartist as I am, this is as beautiful work of art as you're going to see in the Louvre. This is just a wonderful chart. And that's why I almost said I felt confident covering Friday. I didn't feel confident at all. I felt it was the right thing to do. I didn't feel at all confident, and I wrecked my weekend worrying myself sick over it. But I did feel kind of confident today reshorting because the plus 350 on the Dow and reapproaching this trend, this Fibonacci retracement, I felt it wasn't a bad place to go back in. Didn't go back in whole hog. I wouldn't be completely shocked to get blown out of some positions. I'd be a little disappointed though, because my view is that this was a relief rally and a terrific one too. You know me, I don't buy stuff very often, and it's a rare feeling that I shorted, made money, went long, made money, shorted again, and so far I'm in the green. It's kind of nice to kind of hit those turning points with some degree of accuracy. I mean, in a perfect world, I would have covered at Friday's close, But good grief, I'm bitching about an intraday finesse here, so I can't be that mad at myself. But I mean, again, in retrospect, there is something to be said for sort of that pre-weekend fear that people seem to be experiencing with good reason these days. But it turned out that pre-weekend fear was turned upside down with big news. And believe me, I kept my portfolio spreadsheet from Friday morning just for giggles to see what it would have done if I had just held on to everything. It would have been really ugly today. And so all the concern I had about covering that was really dismissed with that spreadsheet. It just took one look at what the losses would have been today, and I pretty much patted myself on the back and said, you did the right thing. You did the right thing. The NQ, with its also beautiful, beautiful, beautiful diamond pattern, did as God intended. Measuring from this low to this high, subtracting that sum from this level. Again, beautiful retracement and a fall. And what I've got to say that I didn't even mark up the charts until just today are these Fibonacci's. You're going to see these turning up in my charts with recent index activity. I mean, goodness, look at this. So this Fibonacci is drawn from August 9 up through, which is down here, I guess, up through the tippy top here. And it looks like, if you observe these turning points, didn't quite make it this high today, but to me, that suggests perhaps it doesn't even have that much, enough strength to carry it. It, in other words, not to anthropomorphize this too much, but it wanted to get back to this level, and it didn't have quite that much strength, almost though. If we had a little strength tomorrow, that would be the point I'm watching. What if, what if the news we had this weekend were announced something 3 times as big tonight? Being a little bit facetious here. How high could things possibly get? To my way of thinking, the NQ couldn't get any higher than around 2300. Between this line and this Fibonacci, this is this is like a concrete wall. And as far as going back to the ES, the similar, no friggin' way would be like at 1240. This is just like a steel reinforced wall with Doberman pinchers and armed men around it. So, yeah. Anyway, let me back up into... Oh, yeah, I wanted to share another thought. I've been reading about, there's all this chatter about, Groupon's below its IPO price. They're sugarcoating it. To my way of thinking, the IPO price has nothing to do with the change in value. They should consider the trading price. If something's offered at $20 a share, think back to 1999 and that insanity. When something's offered at 20, and if it if it's offered at 20 and if it opens at, 90, well, forget the 20. 20 has nothing to do with anybody. Well, it has to do with the investment bank, but members of the trading public, the retail side, reality, there's nothing to do with it. So if you look at Groupon, and it's like, it's below its, what was the offering price, 21 or something like that? No, it's much, much worse than that. If you look, for example, percentage, this is the reality. So, I'm not even using the high price, I'm just using closing prices. So Groupon's down about 42%. Zillow is down about 37%. Pandora is down, and these are very young stocks, remember, these are just a few months old, about 53%. And big old Reid Hoffman's company, LinkedIn, is down about 37% to, looks like a lifetime low today. Why Zynga wants to go public is beyond me. I can't wait to see all the lawsuits and I sometimes get emails if I get a little bit hyperbolic about negativity. I won't go there. Suffice it to say, I expect there to be some discombobulated shareholders in these things because they're not doing well, are they? Can't argue with that, can you? They're doing well for the shorts. Yeah, they're doing great for the shorts. If there are shorts out there, I actually tried to short Pandora. I rarely short anything that's this young, but Pandora, I mean, it's just like, okay, just let me short, let me short $10,000 worth just for giggles, and it's been down hard, but the borrow rate was like 52%. In other words, the broker charges 52% interest just for the privilege of shorting the stock. It's like, well, okay, it may be for giggles, but it's not that funny. Never mind. Borrow rate aside, it still would have been very profitable, but, I got to be sensible. Anyway, let's wrap up with a few other items. Don't know how many of you I still have your attention or not. Just kind of thumb through a few of these. Crude oil. I actually shorted USO today because this has been strangely weak. And I think the bang off of that century mark may be telling. I actually came into the day long TBT, and I sold those fastest of all, and a good thing too, because the bonds were much weaker at the open than they were by the close of the day. This chart's a bit of a mess to me. It's really neither bullish nor bearish. I mean, look how it's cutting through back and forth these lines. If it gathered strength and pushed past its high of the 23rd, well, clearly that's a positive for the equity bears. But I have very little to draw from this graph. There's a couple more here, then I'm just going to wrap it up. I got other things to do. The cubes, a bit more of a simple chart here because, of course, these trade only about a quarter of the time that the NQs and the S's do. So it's like these huge blocks of trading information, if you will, are missing because they just trade in a very limited fashion. But I've got a kind of a 55.3 gap there that might get filled, might not. This is not a bullish looking chart. I hope I don't have to tell you that, but it's not. The spiders, lovely fibs going on here. I was looking toward this 121 level as a potential place to get serious shorting. We could have more strength tomorrow. We could kind of, because listen, people like you and me, even as bears, we're sort of cheering today based on what happened. But, Joe Blow on the street, looked, all he knows is the newsreader says, hey, the Dow was up 291. And that's exciting and bullish and all that good stuff. So today was a very bullish day if you're operating out of, core ignorance and just kind of one data point as opposed to having a real pulse on the market. I don't know. One last one. IWM. Really uninteresting. No, let's try an index instead. Let's try the dollar SML. Yeah, again, and these Fibonacci's, I'm experimenting with different levels here, but this was sort of an interesting one on the small caps. And so we've got this one drawn from 824 to 77. And today, fascinating because we, traversed this entire span in today alone. So, anyway, glad I covered, glad I got long, glad I got out, glad I got short again. There's just glad tidings everywhere. We'll see how long that lasts. But in sum, again, 40% committed, all short positions. There's no really big positions there, but the slightly larger ones are ETFs, which are GLD, IYR, USO, and I will note that real estate definitely looked surprisingly weak. I came in long IYR. It got weak in a big hurry, and I got the heck out and I shorted it. So real estate, for whatever reason, maybe it's because the financials are so weak today, were quite ill. Anyway, that's it for me on this Monday. It's getting very dark. It's like being in London here. It gets so dark so early. So I'll bid you adieu, and I appreciate your time and attention. And good night.